Rohit Srivastava, who is joining us. Rohit, what is the setup looking? Let's talk clearly about Nifty, Bank Nifty first, and then we'll talk about areas of the market which are interesting you. How does the Nifty, Bank Nifty setup look right now?
So while the Nifty may have made a new closing high, Ajay, what it actually looks like is if I go to a slightly broader index, like a Nifty 500, and take the highs of January, February, then we actually have not gone past that. So at this point of time, it will still look like possibly this will end up being a false breakout. We are not taking it as a serious break to new highs, indicating that, you've started a fresh rally and so on. I think this week remains critical because it is the week prior to expiration. And sometimes, selling pressure does build up during this week. So we will be watching till Friday whether we can really stay above 22,120 odd. Because if we slip back below that, that will further confirm that, yeah, this ended up being a false breakout. Now, the other thing which sort of makes us feel that is possibly the case is the a continued drop in volumes. Remember that the rally in December into January was on the back of a lot of volume because of wide participation in probably the mid and small cap segment, PSUs and so on. But now this most recent attempt to go higher is occurring on very low volumes, showing lethargy in the market and little buying at higher levels. And so that's also another sign that we may be in very, very late stages of this move and therefore remain cautious on the indices and the market in general. So what would be the downside? I think, see, if we go back below 22,120, then I think I'm looking at retesting the 21,500 level. That is the critical support. And if that breaks, maybe the weekly average is at 2,500. So that's sort of the risk reward in Nifty in my mind. Bank Nifty, of course, hasn't made it back to the highs. It's probably retraced maybe 70% of the fall that it saw between December and Feb, which is fair. So it now looks more like a bounce to what we might call as a right shoulder. We still need to see the momentum turn down over from the last 5-6 days of bounce, but the weekly momentum indicators remain bearish. And so we'll again look at retesting the lows that we made recently, close to 44,600. And if that breaks, then possibly go to 42,500 or so. That is sort of the setup I am seeing in both the indices.
Okay. And what about areas of the market for shorting and long activity, which you are looking at, or areas which look strong and weak?
So even some of the areas which I thought earlier were strong, like for example, Pharma, and I've been saying this since January that, market looks toppish, probably only look at Pharma. That also is sort of losing momentum. So right here, I think I will look more at, the availability of shorting opportunities rather than long. We can always start with the index, but if I have to move to the next one, there's always two approaches. One is look at, which are the weakest segments of the market where underperformance has occurred, or look at which is the strongest part, which has gone up the most and can react. Now, what has gone up the most is obvious. It has been PSU stocks. If I look at the PSU RSI indicator, it has been at 93 for the last 2 weeks. Even last week, I thought that was high and it would fall. It did fall intra-week, but then covered everything by the end of the week. So in that sense, we did not get a correction on the weekly charts and therefore the RSI remains elevated. 90 something, I'll tell you, is the highest since 2002. So that's a very, very big indication that we've run up and we're really looking for that, downward momentum to, show up on the screen and then that is where you'll probably take the trades.
Right, Rohit. Also let's talk about anything specific that you see in the PSU baskets because that continues to see an up move as well. Obviously, large banks like SBI have seen a very big up move. Other banks are also there in the PSU pack as well. So overall, PSU banks as well as other PSUs as well, whether you look at HAL, BEL in terms of those names as well. Anything interesting on that front?
So now, of course, when you mention the defense stocks, those are like the most been the most sought after in this particular rally, and also been backed by growth. So in those kind of names, it's usually harder to get the trades on the short side. I think the easier ones are probably those which are in the oil segment, or power segment where you get more volatility. and they may be easier to trade because you do need some level of volatility when you're trading. So the lower volatility stocks you would typically stay off from. Now within banking, yes, PSU banks have been the hottest, but the weakest. So earlier I mentioned there are two segments. You look for weakest and strength. So which are the two weakest sectors in the market right now? And those are FMCG and private banks based on the data from 1st of February to now. So I'm just saying 1st February to 20th February, which is the weakest performing two segments. It's FMCG and private banks. And so that becomes comes to the forefront in terms of looking at, weakness developing all over again. We have seen some short-term bounce back in, individual stocks, not really recommending anything, but we've seen HDFC Bank do that. We've seen, ICICI Bank go back towards the highs. So we look for where the breakdowns start really showing up again within private banks in the next couple of days. And that is where I think the opportunities may be.
All right. Thank you so much, Rohit, for joining in with us this afternoon on ET Now, giving us an understanding in terms of the markets as well as what is looking exciting there as well right now. But